The morning report for the 3rd of July 2009. It seems that fear is starting to lead this market, with Obama even coming out last night saying that he believes the worst of the market crash is behind us. That we're not out of the recession just yet, and certainly we have a few more tough years to come. I think what we're seeing in the marketplace is people turn more positive towards companies, and certainly the fear that we had back in March 2009 seems to be leaving the marketplace. Now, what does this mean to the average investor? What it means is it's an opportunity now to start getting back into the marketplace without the worry or concern about the market having any more great plunges. Now, I'm not saying the bull market is back, and I certainly don't expect to see the market soar off from here, but my long-term target is still 4,800, and I expect to see the market trade around those levels over the coming years. Now, what does this mean? Is you've got plenty of opportunity to, one, pick up some core portfolio assets which are paying you nice, big, fat, juicy dividends. Now, there's plenty of them around the banking sector, insurance sector, in your Woolworths, your retailers. There's plenty of opportunity to pick up those big income-producing stocks. There is also plenty of opportunity to pick up those unloved stocks that have dropped or fallen out of favour on the back of fear and greed. An opportunity to pick up or play the coal seam gas, the copper price, the oil price, the gold price. There'll be a lot of fluctuation within the stock market over the coming 12, 18 months, 2 years, and there'll be opportunity to make a bit of money, especially on share purchase plans like Asiano's having right now. Right there is a chance to pick up some nice little small 36% gain if you've got some shares and you're eligible for the share purchase plan. So keep your eyes open for these opportunities, and certainly we'll be bringing them to you as they come to light. They're the ones that are going to make you the nice little gains in the next couple of years, and certainly will bolster your portfolio. Now, if you haven't got a broker, or you certainly want to get in touch with someone, just have a look at our website at growyourwealth.com.au, and we'll help you along with that. But this is not the time to be sitting back. Certainly get a core portfolio set up, but make sure you take the opportunity when they arise, and there will be plenty in the next 2 years. Now, last night we saw the Dow Jones slide back slightly, down 0.3, the S&P 500 down 0.5, the Nasdaq down 0.4. The FTSE followed suit. Sorry, the FTSE didn't follow suit. It was up slightly, up 0.4. So not a lot of movement in the US or the UK overnight. Now, this is a little bit concerned about Chinese and the commodities stoked, a bit of speculation that the surge in equities has outpaced the economy, and they expect a little bit of fallback there. Now, this is going to be a familiar story going forward over the next 18 months to 2 years. So don't get overly concerned, just use it as a chance to look for opportunities. Now, our market dropped back yesterday as well, down 0.6% to close at 4,143 points, and today we're looking to sit relatively flat for the day. The gold price was down 1.3% to close at $927 an ounce. Oil dropped 5.8% to close at $63 a barrel, and the Aussie dollar is down 1.1% to close just under 82 US cents. Now, in other news, what we've also heard today, the GT Property Group is going to split the sheets with Babcock & Brown Investment Bank with their joint ventures. This is going to make the GT Property Group a lot stronger and in a lot better position to negotiate with the banks. What we're seeing here is property sector is about to start restructuring itself, and this is probably the first of the big players to come out and make such a move. This is a real positive. Property prices and certainly property trust prices have been very low, paying huge dividends, and I think there's a lot of growth in this sector, certainly one that I'll be in. We also have heard from BHP Billiton yesterday. It has reached an agreement to sell 30% of its 2009 iron ore volumes outside of traditional benchmarks annual prices, and the contracts are being agreed on quarterly basis based on the spot prices. Now, this is a big boost for BHP and certainly will add to the bottom line. They're looking to boost their profits by about $350 million. Now, I'm still a little bit concerned about BHP. I certainly think this 2008-2009 year may not be the greatest reporting year for it. We'll wait to see what comes out. Certainly want a good opportunity now on this jump in BHP to switch out and look more favourably at Rio, which has done its capital raising and certainly look a lot more solid right now. For more information, go to our website at growyourwealth.com.au.